Good morning everyone, this is Sakis Paraskevo, Fundamental Analyst at IronFX Global, bringing you the morning comment for the 5th of February. In the last few months, we have been seeing a new headline of central banks cutting interest rates or shifting to an easing bias. In their attempt to fight low inflation, which has been intensified by the plunge in oil prices, the banks have taken unprecedented stimulus measures and eased their policies to spur growth. But with interest rates near zero for many countries, or even negative in many cases, and with binding fiscal constraints, it seems that the only tool left to stimulate economic growth is a weaker exchange rate. So, are we in an unspoken currency war? A weak currency is likely to boost the countries engaging in currency devaluation, as it will make their exports cheaper and will support growth in their economy. But if everyone is playing the same game and everyone devalues his currency, then who wins? The bottom line is that we probably end with more and higher FX volatility and higher cross-border transactions, whether it is trade in goods or capital flows. The most recent case, the People's Bank of China cut its reserve requirement ratio by 50 basis points to 90.5% on Wednesday. This will lower the amount of deposits that each bank holds as reserves and add new liquidity into the banking system. The move came after the central bank cut its benchmark interest rate in November in an attempt to keep the Chinese economy stable. Australia and New Zealand, whose economies are heavily dependent on exports to China, saw their currencies jump on the news but gave back all of the gains in the following hour. On other news, the European Central Bank toughened its stance with Greece's new government by restricting financing to its direct liquidity lines. In a statement following their meeting on Wednesday, they decided to lift the waiver on using Greek debt as collateral. The decision was based on the fact that it is currently not possible to assume a successful conclusion of the Greece program review. The Greek banks can still access funding through the emergency liquidity assistance, but at much higher cost to the banks. According to a Greek newswire, the interest rate is 1.55% compared with the 0.05% on regular ECB financing. The Greek finance minister will meet his German counterpart during the day to win support to tackle Greece's massive debt burden, even though Germans remain opposed to such plans. As for indicators, the US ADP report released on Wednesday estimated that the private sector created fewer jobs in January compared to December, but remained above 200,000. With just one day ahead of the US employment report, the ADP report suggested that Friday's non-farm payroll figure may come in over 200,000 again, consistent with a firming labor market, although there is a lot of variation between the ADP and the NFP reports. As for today's highlights, in the UK, the Bank of England meets to decide on its policy rate. There is little chance of a change in rates, especially after the two policymakers who had been voting for a rate increase dropped their call at the last meeting in the face of falling inflation. As a result, the impact on the market should be minimal as usual. The minutes of the meeting, however, should make interesting reading when they are released on 18th of February, as they may reveal how the bank plans to act if the inflation turns negative eventually. From Sweden, industrial production for December is expected to rebound from the previous month. This could prove supportive for the Swedish krona. In the US, initial jobless claims for the week ended January 31st and trade balance for December are coming out. We have several ECB speakers on Thursday's agenda, among which Governing Council member Jens Wiedmann, ECB Executive member Peter Pryet, ECB Governing Council member Klaas Knot, who will discuss about the QE program in the Dutch Parliament. For more information, including technical analysis, please read the full comment on IronFX.com, and also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Sakis Paraskevo, Fundamental Analyst at IronFX Global, wishing you solid trading.